Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 16th, 2025, and we're diving into Glacier Bancorp's latest earnings report for the third quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Glacier Bancorp's performance, especially given the significant developments this quarter.
Revenue and profitability overview. Let's start with the top line. Glacier Bancorp reported a net income of $67.9 million for the third quarter, which is a 29% increase from the previous quarter. John, what are the key drivers behind this growth?
Absolutely. The increase in net income is primarily driven by a significant rise in net interest income, which reached $225 million, up 9% from the prior quarter. This was largely due to higher loan yields and an increase in the average balances of the loan portfolio. Additionally, the diluted earnings per share rose to 57 cents, marking a 27% increase year over year.
That's impressive. How does this compare to the analysts' expectations?
Interestingly, the reported EPS of 57 cents fell short of the analysts' forecast of 61 cents. Despite this, the overall financial performance remains strong, with substantial growth in key areas.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. The net interest margin improved to 3.39%, an increase of 18 basis points from the previous quarter. What does this indicate about Glacier Bancorp's operational strategy?
The improvement in net interest margin is a positive sign of Glacier Bancorp's effective management of its interest-earning assets and funding costs. The company has successfully increased its loan yields while reducing the cost of funding, which is reflected in the enhanced margin. Additionally, the loan portfolio grew to $18.791 billion, and total deposits increased to $21.871 billion, both showing healthy growth.
Looking ahead, what can investors expect from Glacier Bancorp?
Investors can anticipate continued growth, especially with the recent acquisition of Guaranty Bank, which expands Glacier's presence into Texas. This strategic move is expected to drive further growth and enhance the company's market position.
Strategic initiatives and acquisitions. John, Glacier Bancorp has been active on the acquisition front. Can you elaborate on their recent strategic initiatives?
Certainly. Glacier Bancorp completed the acquisition of Guaranty Bank on October 1st, 2025, marking its entry into the Texas market. This acquisition is expected to bolster their growth strategy. Additionally, the integration of Bank of Idaho Holding Co. was completed with a core system conversion, further streamlining operations. The company also declared a quarterly dividend of $0.33 per share, maintaining its long-standing tradition of rewarding shareholders.
How do these initiatives position Glacier Bancorp for future success?
These strategic moves enhance Glacier Bancorp's geographic footprint and operational capabilities, positioning them well for sustained growth and increased shareholder value.
Credit quality and risk management. Let's shift focus to credit quality and risk management. Glacier Bancorp reported non-performing assets of $54.3 million, a 12% increase from the previous quarter. What does this mean for the company's risk profile?
The increase in non-performing assets is something to watch, but it's important to note that the allowance for credit losses remains robust at 1.22% of total loans. The provision for credit losses was $7.7 million this quarter, indicating that the company is proactively managing potential risks. Overall, Glacier Bancorp's risk management practices appear sound, with a focus on maintaining credit quality.
How should investors interpret these figures?
While the rise in non-performing assets is a concern, the company's strong allowance for credit losses and proactive risk management should provide some reassurance to investors. It's crucial to monitor these metrics in future quarters to ensure they remain under control.
Key takeaways. As we wrap up, Glacier Bancorp has delivered a strong performance this quarter, with significant growth in net income and net interest margin. However, the EPS fell slightly short of expectations. John, any final thoughts on Glacier Bancorp's investment prospects?
Glacier Bancorp remains a solid investment with strong fundamentals and strategic growth initiatives. The recent acquisitions and operational efficiencies position the company well for future success. Investors should keep an eye on credit quality metrics, but overall, the outlook is positive.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Glacier Bancorp's performance in the comments below. Until next time.